At the index level, the absence of tech and tech exposure in Europe was a problem. Is it a problem now? Because I hear a lot of people say the index here in the United States is now compromised. Alicia Levine of BNY Mellon was brilliant on that this morning. She said it's compromised, we're going to have a change in leadership. It's no longer about the index level story in the United States. Where are you on that now, Mona?
Yeah, I think the value versus growth story is an interesting one. And certainly in the 10 years post the financial crisis, growth outperformed. And that was because the Fed funds rate, many of those years, was near the low zero bound. We had 10-year average about 2% on a 10-year Treasury yield. And when we think about the environment over the next 10 years, yes, the Fed can take us from maybe a 5% terminal rate back to something a little bit more normal, but are we heading back to the zero bound? Probably not. So in that environment, we do think that there is a better opportunity for more balance between value and growth. Now, does growth have a period of maybe a bounce back in the future and maybe over the next 12 months? That is, a credible scenario. But longer term, we do think that balance is important. And so to your point, from an index perspective, perhaps, having a bit more value in your portfolios makes sense.
Yep.
But certainly having the U.S. With a balanced index is also beneficial.